Here we go. Welcome to Business Incorporated. It's Thursday, the 30th of March. I am Bosi number 5. Let's spend the next 30 minutes together. Seplat Petroleum Development Company, Nigeria's only exploration and production company, announces disappointing earnings for fourth quarter 2016. Meantime, First Gulf Bank plans a tie-up with the National Bank of Abu Dhabi to create a banking giant that will earn bigger weighting in the MSCI. And we have details of Tanzania's president ordering a special audit of mining companies to determine if they pay a fair share of taxes to the East African country. Let's get started, and we're getting that story in early today. Seplat Petroleum, Nigeria's only exploration and production company listed on Lagos and London stock exchanges, have announced disappointing earnings for the final quarter of 2016. Seplat today says its loss after tax was $64 million as its oil production falls sharply 65% to 10,091 barrels per day, and oil sales down 81% to $23 million year on year. The indigenous oil firm reports overall sales figure of negative 66% to $52 million on a year-on-year basis. Gas sales, however, go up 16% to $28 million. And sticking with the Nigerian markets, the stock exchange may be removed from a basket of 3 indices of the US-based S&P Dow, tracking about 13 African stock markets. A Bloomberg report on Thursday says the indices curator, S&P Dow, is considering placing the Nigerian markets on its own outside the S&P All Africa Index, the S&P Africa Frontier Brother Market Index, and the S&P All Africa excluding South African Index. That may take place in the month of May. The report says there are concerns about transactions and returns repatriation out of the Nigerian market. Nigeria ranks about number 4 on those 3 indices with a capitalization of $24 billion and index weights averaging 1.8%. Okay, so meantime, today the NSE All Share Index was in the green, about elevated flat. That's about lunchtime here in Lagos. The market in South Africa was treading water following speculations that President Jacob Zuma plans to remove the finance minister, Pravin Gordhan. The stock market has the JSE All Share Index down 0.5% in the negative territory. Egypt, however, continued to outperform by almost the same margin as the largest market south of the continent. To the east, you have the Nairobi stock market in the red Monday, down 0.69%. And today is the last trading day for the First Gulf Bank, looking to tie up with the National Bank of Abu Dhabi to create a banking giant that will earn bigger weighting in the Morgan Stanley Capital International, called the MSCI. The merger of the 2 biggest banks in the United Arab Emirates will create the biggest financial institution on the Abu Dhabi market. An MSCI review of the new stocks allocation in its emerging markets index next year could trigger $240 million of passive inflows from tracker funds, and that's what the Bloomberg report says. Look at the rest of the market. The Saudi market still holding to Wednesday's gain by 0.5% on the back of the news around Saudi Aramco's IPO in 2018, and the Qatar market down by 0.25%. And the Dubai financial markets almost 1% in the green. Abu Dhabi about 0.2%, about 12:30 Nigerian time. So today is the morning after the UK Article 50 was triggered, and of course investors in Europe are beginning to come to terms with the launch of the Brexit proceedings, called divorce proceedings. All divorces are never sweet, a little bit of a bitter wranglings, discussions, who gets what, and that's what is going on right now. So let's start with my colleague in Frankfurt, Daniel Koop, who is joining me live now from the Frankfurt Stock Exchange to take us through this. The divorce papers has been sent to Brussels, it's been received. Now both parties are discussing the terms of this divorce that will take 2 years. That's the longest divorce in the corporate world, most likely. So how are the markets and the authorities in Europe and London coming to terms with the past 24 hours of this Article 50 trigger by the UK?
Well, hello, Bozen. Hope you're doing fine. Well, let me just tell you in general how the mood is here in Frankfurt, but also on the other, stock markets around Europe. Every day, it's, kind of a surprise what is going to happen. Last week we had this discussion about the health bill of Donald Trump. Today, the official announcement of the UK, to leave the European Union. So every day, traders here in Frankfurt, and that's what they're telling me, they're kind of coming with this weird feeling of uncertainty, to work, because they are just not really knowing what is going to happen. When you're talking today about Frankfurt, the DAX is actually still performing pretty well. It's, still over the magical 12,000 points. We do not really expect a really big movement today. This is also because of an announcement from the United States that interest rate might be again, would be again higher this year. Actually, not just one time, but even maybe 3 times. And always when there's an announcement coming about interest rates, this is kind of, harming the trading day at the stock market. On the other hand, also when you look to the UK, the FTSE index at the stock exchange in London, also not really struggling. We are all waiting for an announcement actually today of Prime Minister Theresa May, who will announce today more details how actually laws that are right now, taking place in the European Union might be transferred to laws, now trading with the United Kingdom. So we are waiting for this statement, and we'll see how the markets are going to react after this statement.
Very interesting, Daniel, how markets will react as Lloyd's Insurance, one of the biggest insurance companies in London or in the UK, says it's moving from UK to Brussels. This looks like one of the early exits as far as the Article 50 is concerned. And we also have the Eurozone consumer confidence data. These are 2 of the top headlines from your jurisdiction today. Talk us through this.
Yeah, well, those were 2 very big news. On the one hand, we heard new reports on the consumer confidence data, and it's actually dropping from -5 now to -6.2%. So this is dropping a little bit. It was actually dropping in the last 2 months, and before the last 6 months, it was actually always, moving